Hey everybody, Dr. Tom Carr here of drstocks.com. That's drstoxx.com and drstockstrading.com, our brand new sister site with our two most profitable letters, the Hot Stocks letter and the Penny Stocks letter. Go to either one of those sites, sign up for our free weekly stock pick letter, and you're off and running. Okay, let's take a look at how we did today. Now, today was a very red day for the markets. They bounced back a little bit in after hours trading, but the Dow Jones Industrial Average was down well over 200 points on the day. The QQQs were down almost, well, at 1.2%, which is very big for Nasdaq 100 stocks. The biotech index got hit the worst, 3% down, and that's after a little bit of a bounce back. So not a good day for the markets, but a good day for us. Hey, we'll take that. Let me get my drawing tool out here. And never mind. I can't seem to find my drawing tool. Anyway, $1,629 on the day in our day trading account. Now, this is an account that once it gets up to 200,000, I take money off the top and throw it over into our long-term account so that I'm building a wealth portfolio of stocks, really good companies that I'm holding long term, and plan on not only retiring on that money, but also handing it on to my kids, grandkids. But this is my fun day trading account, and so with about 180,000 in the account right now, we had a nice 1% gain, which is always good on a red market day. Now, how did we do that? Well, we had one really lucky trade, which netted us $846, and that was in Constellation Brands, which came out overnight, or sorry, in the morning, with an upgrade to their earnings estimates, and the stock ramped way up. It closed yesterday around 212, I think, which is where I bought it. I bought it right at the close of yesterday, and I'll show you why. And then it ramped up to about 225. Now, I sold my shares at 224 something, and then I turned around and shorted them because I knew in a red market day you want to short the big pops like that. And we ended up netting three more points on the short trade. So nice little turnaround there. I did something similar with LABU. I was short LABU overnight, small position because LABU is a really wild mover. And then once I took a quick profit on that, and then waited till late in the day to hit a bounce, and we bought back some shares, and we're now holding 75 shares of LABU from a price of 81.13. We'll see how that does tomorrow. I'm holding that overnight. Markets are now closed, along with a few others. I've got SFIX in there. We'll talk about that chart in just a minute. FINGU is an interesting ETF. It is the 3 times leveraged bull ETF for the FANG stock. So it's a big mover. It's not a good one you'd want to hold long term, but it's certainly a nice day trading vehicle. Wish I had a little more volume, but it's okay. We also had a nice trade in QID, along with SQQQ. These are index ETFs that track the inverse of the Nasdaq 100. So we had a couple of those trades on overnight, and I'll show you why. We also had a nice little trade in AMD on the long side in a down market, and then I went long RUSS, which is the bearish ETF for Russian stocks. That was an overnight trade. So we did well all around. Now let me show you some charts here. If I can get to the right, there we go. Okay, so here's the STZ trade. Now I sold it, I bought shares of STZ at yesterday's close on this big red stick above average volume. It was down near the lower Bollinger Band. It had retraced 50% of the move off of the August lows. And for a stock like this, which is a strong, fundamentally sound company, big component of the S&P 500, this move from 220 down to 210 was quite a sizable move. I thought it was a bit overdone. So it was hitting the 50-day moving average. I went long. I got very lucky. So I got out at 224 something at near the open, and then turned around and shorted it at 224 even, and caught 3 more points down here to 221. And I could have held on to it all the way down to 216 something, but you know, you don't get greedy. So anyway, that was a nice lucky trade, but certainly one that you know, happens, and you can see why I did that. Now QID is a position that I was working myself into over several days, and here's why. We had 3 days in a row of near or above average bullish volume at a prior price low, and 3 green candles, which is always a bullish sign. We also started to see bullish, what is the right word? Divergence, bullish divergence in the relative strength index. So with those combination, the volume and the prior price low and bullish divergence said to me, this is something that I need to get on board with. So I bought up and above, like a little bit below 35, quite a bit above 35, and then I sold today too early, but I sold at 35.75 down here on a big morning pop. I was worried that we were going to get a fade all afternoon. We did not. We got a big long trend day, pretty much in the bearish direction, except for the last hour or so. So that was a nice trade. I went long SFIX today and am still long SFIX, and this is one that got whacked really hard on earnings. Now, why did I buy today? I bought today for 2 reasons. One, it tagged this lower price low and held by this green candle. Shows me that bulls were in control of the tape today. And so I started nibbling on shares. Once I started to see the intraday trend rising in a downtrending market, I knew that I had to buy some shares. So I didn't go heavy in this. You don't want to go heavy on a falling knife like this. But that's why I bought SFIX. I've got some profit in that trade right now. I plan on getting out half at around 30 and maybe another half around 32. I'm not looking for anything huge on that. Now, I did buy LABU right at the close of today's trading because, and I had a short on overnight, and I'm sorry, I didn't have a short on. I had a long on overnight, which lost some money, but the short that I put on later in the day made some money, and then right at the very end, I covered the short and went long. So I have a little bit of profit in this position, but I really thought it was going to go much higher today on this green candle. This is what I call an out-in pattern with a lower Bollinger Band. Outside the Bollinger Band a close, inside the Bollinger Band close, I bought near the close of yesterday's trading and then had to scramble to sell it near the open, taking the loss, and then I shorted it for a short-term trade to make a little bit of money back, and then I bought it back right at the close of today's trading, maybe a little bit below that. So looking for a bit of a bounce back tomorrow, in part because of this massive volume, in part because we're well outside the lower Bollinger Band, and in part because we're not seeing lower lows in RSI, even as we're seeing lower price lows. Okay, so that was the trading today. Not a bad little day for a small-ish account. $1,600 a day. We'll take that anytime the market is red. Take that anytime the market is green too. All right, guys. God bless everybody, and we will talk to you soon. If you ever want to email me at drstocks@drstocks.com. drstoxx at drstoxx.com. Bye now.